The I6 saga, that's what I'm going to talk to you about today. ICICI Securities has had quite an interesting journey in the stock markets. When it did an IPO, there were a lot of people baying for the blood of the investment banker. To me, it appeared that the company would live up to the IPO price. I never had a doubt in my mind. But there were people who were saying that the IPO price is too high. Related parties are investing in the mutual funds, and all sorts of controversies were dug up. But as an investment, as an idea, to my mind, ICICI Securities look like a decent company. We can always debate the valuation of the company. Then, the stock lost a significant part of its IPO value. When it came to 200 rupees, to me, it looked every bit a compelling buy. Here was a company which I saw could potentially be a growth stock available like a value stock. So I did bite in, though I would have loved to bite a lot more. I would have loved to back the truck, but as luck would have it, I could just make it a position. Subsequently, as it showed growth, as its peers started growing and everybody started growing, more people entered the market after COVID. It had a dream run. The stock price ran up 4 times or even more in a very short burst of time. At that point, I felt that the price may be a little ahead of earnings, and I could see that the same rate of growth was not sustainable. So I also ended up exiting the stock. So here was a stock which gave anywhere between 3.5-4 times in a very short burst of time. So even if somebody had invested in the IPO, he would have still made money within reasonable time. But subsequently, markets have cooled off and the stock came down to 425 levels. And now you see this news of ICICI Bank considering merging or acquiring ICICI Securities. So this decision is something that will be talked about a lot, but let's look at both sides. First, the firm derives a lot of its strength from the bank. ICICI Securities gets a lot of its power from the bank. The bank is forced to concede a lot of its business territory to ICICI Securities in order to help it succeed. It lends customers. It brings a lot of power to that company. In that context, the company being standalone probably doesn't make too much sense. But it didn't make sense in the first place when they did an IPO. So the very idea of doing an IPO was probably not well thought through. So today, a few years later, the board in its wisdom thinks that let's fold this back into ICICI Bank so that we can grow it in a way we want and also in a way which doesn't hurt the interest of the bank shareholder. I expect the deal for the minority shareholder of ICICI Securities to be decent. It will not be very attractive, it will not be low either. And I think it's in the interest of everyone that this company goes back into ICICI Bank's fold. It would simply be similar to HDFC Securities. This is a difficult decision to stomach for shareholders who thought they would remain with ICICI Securities for a long period of time, but sometimes you need to stomach difficult decisions. Because if the bank exercises its full financial leverage and business leverage with ICICI Securities, the company will be far weaker. So all the strength that we see is what the bank has vested in it. Today the bank feels that it is compromising its own interest in order to let this company thrive. So it feels it is better to fold ICICI Securities back into the bank, which I think is fair because that conflict of interest will only grow as the company grows. So it's better to do it earlier than later. This again brings us to a very critical question of companies spawning divisions into separate entities when the division derives a lot of its strength from the parent. I think companies should be more circumspect in future, because if the parent still needs to support the new entity heavily and give up a lot of its own profit pool so that the new entity does well, I think it's not fair to all stakeholders, because the minority shareholder starts thinking that he's owning shares in a company which actually draws most of its strength from the majority shareholder. So the minority shareholder feels cheated if the majority shareholder takes what is legitimately his right for what he is giving to the standalone entity. So this conflict of interest can always be ugly, and it is better that it is resolved fairly, equitably and amicably. The only way to do it would be to fold ICICI Securities back into ICICI Bank and allow its growth to reflect in ICICI Bank. Probably you may see better performance, but don't feel bad, because that performance comes because of the strength of the bank and what it can add to ICICI Securities. And the best entity that can add maximum power to the subsidiary is the parent. And the parent is best left to do what it wants to do, provided it gives a fair and equitable ratio and valuation to do what it wants to do. Thank you for watching this video.